Howdy, lieutenants and economists.
The most volatile, evil, disgusting things on the planet, humans. If you have a video request, you can always go to assholeconsulting.com.
Yeah, I am gonna charge you, kids. And that is the importance of not fucking up.
You are such an asshole!
Greetings, also Captain here. We're in Mobile, Alabama. Yeah, never been here before. Never coming back. No, I don't. I pulled in late last night. I don't know what the town looks like. I saw red tops on the thing after I drove across the bay. Everyone's like, "Oh, you gotta give it a shot." I'm joking. We're gonna go putz around and hang out a bit today. Anyway, Aaron, you did a video for me a while back about not living in liberal cities. It was great. Thank you. I could really use some of your wisdom when it comes to oil. I know you can't give specific stock or commodity advice, so I'll try to keep my question vague enough for you to answer in general economic terms. Firstly, I completely agree with you that the stock market is overvalued because of retirement plans, etc. I reached that conclusion on my own a few years ago, and everyone thought I was fucking nuts. Everyone thought I was fucking nuts when I said housing was peaky, and so were .com. In the age of currency credit, all that other credit. But you're always nuts until it happens. How do you know? Why didn't anybody see this? The sheep will just... They're sheep. It confirmed to me that I am not the one who is nuts. With oil, I have 13 years lows. I don't know if it's that low. And expected to go down even lower. I'm thinking hard about making a rare investment in the stock market and buying a large oil company stock. I realize that oil is low because the Saudis are pumping like crazy. Demand is weakened in China, and thanks to Obama's stupid fucking deal with Iran, the Iranians have millions and millions of barrels that would also soon be on the market. On the flip side, many fracking companies up in North Dakota have been going bankrupt because they need oil over $70 a barrel to make a profit. It seems to be underreported that large American oil companies, big names that we are all familiar with, have been buying up these fracking companies dirt cheap. When the price of oil rebounds, those large American companies, in my opinion, with their newly acquired fracking assets, seem well to be positioned to make a piss load of money. My questions are... Excuse me. Is there any flaw in my logic? No, your logic is completely sound. 100%. You may even, you won't want to buy the bankrupt assets of these individual companies, but you can indirectly buy them through your idea of buying these American companies. 2, oil companies like ExxonMobil or Chevron more immune to generally overvalued markets because oil is a commodity and theoretically at least is fairly valued. Oil will be valued. It's always fairly valued. See, the stock market is always right, and you are always wrong. What happens next is different, but oil is always fairly valued. It is what it is. I'd like a video, and if you're feeling generous, please do a public service and remind all the rookies out there why the stock market is overvalued. Okay, let's do that one first. I'll go into the oil. The stock market's overvalued because the baby boomers who have all the money have driven up all the stock prices with the 401ks, IRAs, and other type of 457s and retirement plans because you get a tax deduction. And then also there's quantitative easing, and all the money that's been printed off has resulted in lower interest rates, and companies have borrowed money at low interest rates to buy back their stocks. So no one's buying stocks anymore for the fundamental reason that would be profits and dividends, but because retirement, repurchase it, yay! And that's the short version there. But are oil companies and Chevron more immune? Yeah, because primarily leverage all these... Not all of them, but most of them, a lot of them, these fracking kind of companies, all the way from, I saw it when I was out in Wyoming, these introductory independent contractor players to medium-sized type fracking or oil-related companies. They were leveraged to the hilt. They were just leveraged to the hilt. And you can look up the balance sheet of Exxon and Mobil and all that, and they have way more equity on their accounts. And they also have way more access to financing if they need it, if they run into a cash crunch. So the last time, what was it? Was it 2005? No, that's when oil prices went up. Maybe you are right. Maybe it was 13 years ago. Yeah, it was 13 years ago. Oil was that low. You're right. It was 13 years ago. That is, they still weathered that storm. The profits certainly took a hit, but they're diversified. They have, they don't just sell oil. They have consulting, they have engineering services, they build, they work for the Saudis. I mean, don't think it's fucking Rahib out there in Riyadh building these fucking things. It's fucking Western companies. It's fucking British Petroleum, Exxon, and us guys. The Aramco belt down, if I pronounce that correctly, down in Venezuela. You think those dipshit fucking socialist Latinos down in Venezuela who had Hugo Chavez's dick and now Maduro's dick. They had Chavez's dick in their mouth, they thought, until Maduro came in and fucked them up the ass. And now you think those idiots know how to build their own fucking equipment and gear down there? Some of them do, and they got the hell out of Venezuela because they got skills. But yeah, that's all relied upon Western technology and predominantly held by American and European oil companies. So they are much more diversified than the guy with his who dang dang diggly dangly Dodge diesel Ram truck, who drove out there and did his dingly dangly and worked as an oil hand, and then went to leverage to the hilt and lost everything when the price of oil went bust. But in general, yes, Yorker. Now here's where you're going to run into problems, or where it's good, but an introduction of the reality of the market. A good sign is that these companies are buying up these fracking assets on the cheap. All right, oil may never go back up high. You never know what's going to happen in the market, and it may not work out in the end. So this may not come to fruition, what your investment plan is. But it's smart because that's where the big money is. So that's one thing. The other thing is it's an interesting psychology that every human has, but we turn the psychology off when it comes to the stock market. But women in particular, Kohl's has a 50% off sale. Of course, they always have a 50% off sale, and women don't realize this. But, oh my gosh, we got to go. We got 3 pants. I saved so much money. Yeah. It's like, no, they always have sales. You girls don't get it, do you? Heck, Michael's Fabrics. I've never paid full price at Michael's Fabrics. You never pay full price. Everything's on sale. Well, I'm saying when there's a real sale, like, we got to liquidate something, or we got to, I remember when Kuppenheimers went out of business, they were liquidating there. I got suits on the cheap. And humans intuitively know, now is a sale. Let's go buy because our purchasing power is higher. Except when it comes to the stock market, we reverse it. The stock market's booming. The housing market is booming. We got to get in. I got to buy. It's going to go up. I don't want to get priced out. It's like, no, you want the stock market to collapse. You want it to crash. So what you're doing with oil and the stock market, both collapsing, or not collapsing, but going down, oil more than the stock market, is you're wise. You're waiting for it to go on sale. Now, does that mean Kohl's, after its 50% off sale, won't the very next day have a 75% off sale? You don't know. Oil and the stock market keep going down. You could have bought oil at whatever it is per barrel now, and the stock, the S&P at whatever it is now, and then it could go down another 10%. But it's less than what you were paying at the peak. And so what you're doing, over the long haul, if you just wait for crashes and corrections and then buy. No one times the bottom perfectly, and you never time the top perfectly. But if you at least wait until the stock price goes down, or oil goes down, not up, and then buy. You just wait for it to crash, and oh my God, panic, fear. When there's blood in the market, when there's blood in the streets, that's when you strike. Doesn't mean there's not going to be any more blood. Doesn't mean prices can't go down further. But you got a better price than what previous suckers were paying. So I do like your strategy. Again, there's no guarantee. I can't guarantee the price of oil collapses or tomorrow we find a new engine that replaces the combustion engine and oil goes away. The stock market could collapse completely and you'll never see it recover just like Japan did. But it's better to absolutely, when you start seeing bankruptcies and people paying book value, which is presumably what these companies are paying for the fracking assets, that's kind of a good sign. Yeah, no guarantees, but that's better than, we just bought this and IPOs are an all-time high and interest rates are super low, because those are bubbles. So, but yeah, I like it. Don't bet the house on it. Take a little position here or there. It's nothing that would threaten your overall financial solvency and stability. But yeah, this is I'd say that's kind of a good diversification. That's not the worst bet I've ever seen. Look, I think you stand better shot at that than you do going to the casino. And so I'm as long as you don't, rule number one of diversification, no one investment destroys you or tanks your financial portfolio. No one. All right? You're not too overexposed in housing, real estate, commodities, particular any individual stock, any individual bond. You have a good diversified portfolio. So as long as you don't go ape shit with it, I think you'll be all right. But again, I can't. This could be the world's worst mistake you make. I mean, you could be in the streets tomorrow. You could. Statistically unlikely, but you could. So anyway, best of luck. Toodles.